Hi there, welcome to Kneppy Invest, and time for another non-viewer suggested financial year 23 result video. And since I have never looked at Boral in the past, I think it's about time I took a look at this company. And even though I have never invested in Boral, I have done zero research on this company. I know what this company does. They are a vertically integrated construction materials company with 360 operating sites throughout Australia, including 209 concrete, 76 quarries, 41 asphalt, 17 cement, 14 recycling, and 3 concrete placings. Now, this company has changed over the past, say, 3 or 4 years because they have made quite a few divestments. And on the 1st of February 2022, they decided to return $3 billion in surplus capital because of those divestments to shareholders by way of a $2.72 per share cash distribution. And also, the ownership structure of this company is absolutely fascinating. So let's talk about that right now before we have a look at this company's financial year 23 results. As I said before, I don't follow Boral all that closely, but I do know there was a takeover bid for this company from Seven Group Holdings. And in fact, Seven Group Holdings owns 72.6% of this company. So if you do like Boral, one way to play this particular trade or this particular investment is just to buy Seven Group Holdings itself. Maybe in the future, Seven Group will overtake or buy out the rest of Boral. But Macquarie Group is another large shareholder of this company, and they own 9.12% of Boral. So combined, Macquarie Group and Seven Group Holdings own about 81.7% of this company. Now into the financial year 23 results for Boral. $3.5 billion of revenue, which was up 17% from last year. Profit at 142.7 million, increasing 304.2% from financial year 22. So massive increase in profit. Now that profit was before significant items from continuing operations. So they did have some discontinuing operations because they have gone through a lot of divestments over the past few years. Gross margins at 26.6%, but if you just compare the revenue and the profit, this company is and does exist on fairly low net margins. Operating cash flow significantly higher than profit, and one main reason behind that is because of capital expenditure. So capital expenditure for this company tends to be quite big, but $332.8 million of operating cash flow, which was up 66% from last year, and free cash flow at $123.7 million, a significant increase from 2022, up 316%. Boral has $2 billion of equity, which was up 6.8% from last year. And I do like to look at equity, and my main preference is to see equity increasing year on year. That's actually a good sign moving forward. Not a surprise was to see return on equity and return on invested capital below 10, 7.1% for return on equity, 6.8% for return on invested capital. And why that's not surprising is because I wouldn't classify Boral, even before I did any research, as a high quality company, and non-high quality companies or lower quality companies don't have high return on equity and return on invested capital. 1.1 billion shares, and that means the market cap of this company is $5.1 billion. Now, that was a little bit surprising when I did compare their profit to their market cap. So this company is right now trading on a fairly high valuation. We'll look at that in the next slide. Net debt, this company has $338 million of net debt, and that's not too high for this company with a market cap of $5.1 billion and equity of 2.03. So debt to equity is not too high for Boral. Now onto those valuation metrics. P/E ratio 35.7, which does seem a little bit stretched. Now, because I haven't done enough research in this company, potentially this company has significant growth in the profit over the next few years. And if it doesn't, then this company is or should be considered overvalued. Price to book at 2.5. Price to operating cash flow, using their much higher cash flow or operating cash flow the company had compared to the profit, and that's at 15.3, but still a little bit more or higher than what I would like for this type of company. Also did a reverse DCF based off the operating cash flow. So being a little bit more, well, less conservative. If I was being more conservative, I probably would have used their earnings per share or free cash flow. And just to justify the current valuation of this company, Boral will have to increase their operating cash flow at 9.2% per year. And I do think, this is just my opinion, I do think Boral might struggle to hit that 9.2% increase per year over the next 10 years to justify the current valuation. One thing I like to do for all companies, no matter what they do, apart from story stocks who have no revenue, is just to look at the revenue history of a company. Now, for companies that have just recently IPO, this is way more difficult because even though they do release a few years of financial data before they IPO, it's only a few years. So at most, you have maybe 3 or 4 years of history. But Boral does go back a fair way. But the only problem with Boral is because of those massive divestments, you see a massive plunge in revenue between 2019 and 2020. So it seems like maybe this company is not performing, but it was just those divestments. So it went from $5.7 billion in 2019 to $3.1 billion in 2020. But revenue has increased from there. Probably the most concerning thing here is if you look at gross margins. So that's the other thing I've included here. I also included free cash flow. But gross margins have dropped. In fact, they've dropped when the company made those divestments from about 33% down to about 25%. So it seems like they decided to sell off some of the better gross margin businesses. And I think some of those businesses were located in the United States. So that's probably the one concern I do have is decreasing, well, a lower gross margins. Hopefully, gross margins could increase over the next few years. And if you do look at free cash flow, it really hasn't really increased over the past 10 years, even taking into account the revenue blip we saw between 2019 and 2020. Now to some charts, and the next two charts I'm going to show you are for the same period, a 10-year weekly chart, but they're going to look completely different because what I've done in one of these charts is I've adjusted the chart to the dividend. And the reason I mentioned that special dividend in 2022, that $2.72 per share cash distribution, is because it can affect the way you look at a company if you're just looking at charts. So this is the unadjusted chart for Boral, not taking into account any dividends. And it doesn't look that good, but you can see when the company gave back that $2.72 special dividend to the shareholders, it happened at the start of 2022, and that was that massive drop in share price. And the share price kept on falling. So right now, the share price is around about $4.40, while the 10-year high is at $8 or just above $8. So the share price is nowhere near the 10-year high. In fact, it's almost half from the 10-year high. But if you adjust the chart to take into account the dividends, this looks completely different. In fact, the share price right now has just pulled back from the 10-year high. So all this chart is doing, and it just got this straight from TradingView, is it adds back the dividend or takes away the dividend from the chart. So it takes into account not only the share price appreciation, also takes into account the dividend. So shareholders right now are much better off than they were back in 2018, when, remember, that was a share price high because of that special dividend of $2.72. And that's all I have for this look at Boral's financial year 23 results. First time I have done any research on this company. And to be fair with you, there was no surprises at all with Boral. I wouldn't even say I am swayed either way in regards to not wanting to own this company or wanting to own this company. And I still think this is a low quality company with probably not much significant growth in the future. And when I say significant growth, I'm talking about revenue growing at more than 10% per year, profit growing at more than 10% per year. That sort of growth is what I am looking for. And that's one of the reasons why I don't really fancy these type of companies unless it's a trade, unless I see some value. And with Boral right now, I don't see any significant value. Now, maybe you think differently. So if you do think differently about Boral, I'd love to hear your thoughts on this company. Maybe I'm missing something about the future. Maybe that's why the PE ratio of this company is at 35. Maybe this company can grow significantly over the next 5 or 10 years. And if so, if I'm wrong, I'd love to hear it. So leave your thoughts, your opinion in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.